About this asset, I remember one important item which shouldn't be forgotten in accounts. Okay, tangible and intangible assets. Those assets that you can feel and those assets that you cannot feel. So why those ones that I mentioned that fall under non-current asset, you can feel them, right? You can touch them. Yeah, motor vehicle, you can feel them. But I remember another thing, we call it tangible. They are tangible, you can feel it, just as the name goes. So what of intangible? I will leave this for you to Google. I will leave it for my student to Google. It's very important in accounts. Actually, we don't know that goodwill is an intangible asset. We don't know. Goodwill. Many of us don't know, okay? The goodwill an organization has is an intangible asset. Actually, when you are buying a firm or acquiring a firm, and that firm already has a good brand name, already has a goodwill, you are not just buying the property of, you are not just acquiring just the property of that firm, you are also acquiring that brand name. Okay, yeah, you are also acquiring that brand name. Okay, so Google it and leave the answer in the comment section for me to review. Okay, so also let's talk about some of the accounting concepts. Accounting concept. There is what we call going concern concept. There is what we call entity consent. I'm trying to remember all of them. We have accrual, which I've said before. Accrual consent. We have realization. We have cost concept. Yeah, cash. Double entry, which I've tried to explain before. So I want to explain this. I want to start with this first. Entity concept. Okay, especially for a registered firm, and I think it's applicable in all countries. Okay, this concept simply states or simply implies that an entity or an entity is far different from the owner. A company is far different from the owner. Okay, just like when, for example,